Let's get to our stock of the day, Afterpay. So Afterpay is going to let its U.S. customers, select U.S. customers, use the platform at major retailers, including Macy's, Walgreens, and Target. But the big one is Amazon. So the move marks a shift by the BNPL player, which has so far limited customers to just its partner merchants. So we've had quite a few brokers coming out and commenting on this. RBC Capital, for one, says that it will increase volume and frequency over time in the US, generate revenue yields that are pretty positive, also saying that what it will do is allow Afterpay to use its data on customers to drive more relevant, personalized lead volume and data to merchants. So RBC Capital Markets, for one, is seeing this as a big positive for Afterpay. And this is where I bring in my guests to find out what they think, not just of the news, but of the price action that we've been seeing in Afterpay as of late, for any indications of where it may go. Jason, I'll start with you on Afterpay.
Yeah, look, this has been the boom stock of the last 15 months. Got to a peak in February. It had a 50% pullback. So look, it's a volatile stock at the best of times. It got to a low last month, probably about 6 weeks ago, and it's now rallied 60% off that low. So these are huge moves we're seeing in short spaces of time. The news just out in the company which you were going through. Look, I think that's really significant. It's certainly driving the momentum at the moment, and by all measures, it looks like we're going to see this momentum run further over the course of at least the near term. I'm a trend follower. I go with the trend. I follow the momentum. If I'm in a stock like this, I always let it run, because you never know how far a trend can go. They often go much further than anyone expects them to go. That's why you let your profits run. In terms of, like, if I didn't have a position in a stock like Afterpay now, it's a difficult one because it's so volatile. You've got to think about, well, look, okay, it's all good if it goes up, but what's my exit strategy if it comes down? It becomes really hard to manage your risk. So look, I think we'll see it go higher, but it's not for me, it's not the sort of stock I'd be looking to add to my portfolio at the moment.
Right. Okay. Now we've got an outperform rating from the aforementioned RBC Capital on Afterpay with a $150 price target, Carl. It's currently sitting at $131. To Jason's point, it's been up at around that $150 level before. So would you be buying now?
Yes, good question. I don't think I would be buying now. I'm a little bit like Jason. I think if you had it, you'd hold on to it. I think the problem, look, I think this is a good announcement too. Of course, it's more about utility for customers than something that's really groundbreaking. Certainly, if you have a press release, you want to put the likes of Amazon in there and those others, and say that you've got nearly half of the US retail market captured with this one announcement. But really, what they're doing is just allowing a select group, mind you, a select group of users for now, to purchase from those retailers within the Afterpay app, so within Afterpay's environment. And that's where you talked earlier about data and data analytics. That's where it will certainly help them. And the more people they can sort of drag into their own little environment and keep in there, it's going to be better overall. But look, it probably will have a positive impact on overall sales, in short, medium, long term. So it's a good announcement. That contrasts a little if you look at sort of their March quarter update, where there was the inkling, and it's just an inkling of some slowing down in their sort of gross sales values in the US, but Australia, Europe, UK still doing quite well. Most brokers, as a result of that inkling of a slowdown, did downgrade their sort of this year, next year, year after estimates by somewhere around about 5 to 10%. This company needs to keep growing. It is a growth company. It's a growth story. It needs to keep growing order of magnitude, somewhere between 150 and 200% to justify its current price, in my opinion, and where it's, what you're paying for the growth in the earnings down the track. And that just for me just screams of execution risk. So they're huge numbers that it needs to maintain year in, year out. I've got basically a 3-year time horizon when I recommend something for clients. And I think that's a big ask. So, if you squint real hard, it's fair value around here. I think RBC's target of 150 is not unachievable. But remember what I said at the start, I'd like to find the right stock. And I think this is the right stock. It's got great growth, but I want to find it at the right price. And I don't think it's particularly cheap at all. In terms of the chart and that marrying to the first two check boxes, look, I think it's huge extension. We're talking 60% plus since May 13, better part of 6 weeks. I think leaves it prone to a little bit of a pullback. If it got down to sort of 110 to 100, that's where the valuation starts to look a little bit better, and maybe then we're back to some longer term support. So look, if you had it, you've got to hold it. As Jason said, you don't know how high it can go, but I'm not adding it to the portfolio at this price.
Got it. Thanks, guys. That's Afterpay, the
And
stock.
look, I just add, Nadine, like with the price target of $150, if we're at 130 now, it's like, you're shooting for $20 and you've got to look, where's my risk to get that $20? And that's just why it doesn't quite stack up for me at these levels.
Yeah, got it. All right, guys, thanks. Stock of the day, Afterpay not going in the portfolio.